out soon. It's going to be on fundamental analysis. And so this is going to be a great class for people that are looking at like longer term positions. But I think it's also great for you to know about fundamental analysis as you evaluate stocks and positions. So that's going to be coming down soon, and then eventually we'll get into options, because I know a lot of people are waiting on this options class to come out. So yeah, so start out with your paper account first. Yes, test your strategies. Somebody asked about steps before. Yeah, you want to get a paper account. This is going to be an account where you don't have to risk, nor do you get any reward other than learning, and you can begin to play around in the market without having to lose any money. You can test out your strategies. You can do option plays. You can take some positions and see how your theory would have played out without you actually investing any money. It's a simulator of sorts, but it gives you a great feel for the market, and you begin to understand that. So, Paris, I would suggest that you, a lot of info to deal with. That you start out at least 6 months in your paper account, so you can get familiar, get established, and start to feel confident. So when you get ready to make your first, buy or first investment, you feel good about it. Yeah, absolutely. He said the only way to retire early is to make more money. So yeah, so the sooner you begin to invest, the sooner you get your money working for you, and the sooner that you can live the life that you want to live. The sooner you can get off of the, break away from your job, or you had an option to if you want to, because you have financed your future. And again, I don't know why. And I stopped asking why they don't teach this stuff in school. They don't teach people about investing. But guess what? We don't have to wait on everyone else to teach. We just do it ourselves, and we teach one another. So that's what this is about. So Zoe, man, y'all know you're getting in late, man. You got anything to share with the people, man?
No, I was just trying to go through some of the news feed and see what was going through, but I tried to start from the top, but I think it's too much that's been going on. So, but yeah, like they say, just paying off your debt early, which is a great start. Making sure you're putting in cash that you necessarily don't need, but you need those funds to work for you, so you can get to that early retirement. How did everything go with the Walmart and all of the other?
We didn't get into Walmart. Sean kind of crashed the party and started asking these questions. He's the VP of Blab. He came in and started asking some questions about investing and stuff. It was a great conversation, and so we didn't get into the other things that we were looking to look at today. But I think it's been great conversation. There's been a lot of questions. A lot more questions than before, so I've been trying to answer some of those questions as best as I could to give some wisdom and some suggestions and advice to people that are looking to do things. We talked about investing for your kids. We talked about where you can go and get started with that. So it's been a great conversation. So Felicia saying, well, if we could talk about Walmart real quick, that was one of the other stocks that came up. And so we could talk about Walmart real quick before we let go. So just so you guys know, again, this is Blab. This is the Ticker Tuesday Stock Talk. Next week, we won't have one of these. We're actually going to be on a different, we're going to be somewhere else and actually teaching those people that want to learn about stocks. So if you're interested in something like that, you can always follow us on Twitter. You can just click above our names and click follow, and you'll get information about this class that'll be coming up next week. Now, this class is a little bit deep diving. And so we'll actually be going into a platform, sharing screens and going through it together. And that's going to be a place where you can be like, hey, if you're not really comfortable and you want to learn about money and how this thing works and how all of these different positions and look at some charts and things like that. We don't have that functionality right now on Blab, but we'll be able to do that through our other platforms. So feel free to follow us. And then if you want to join us on that class, you can do that as well. But we'll be back in 2 weeks. For you guys. Now, hopefully, some of you guys are going to jump in these hot seats. I know you're like, man, I don't know what I'm talking about, but that's not the point. The point is to get you guys engaged and we can have this open conversation. I can talk, as you guys can see, but I really like to talk to people and really have some engagement and some conversation going on. So let's talk about Walmart, man. What you think about Walmart? What's your thoughts on it? Let me pull up see, now I'm going to my other screen here. So, guys, I'll ask you guys, what are your thoughts? Oh, matter of fact, while we're looking at it, what are your thoughts on Walmart to all of our guests, people on the right, if you have looked at it at all? One of the cool things that I saw today that was very interesting was I saw some big plays on GE. Saw some big plays, big money plays on GE at the $35 strike price, and looked like it was what we call a straddle, which means that they're playing both sides of the position, both a call and um, a call and a put option on GE. So I guess, and it was for November. So I'm thinking that they're whoever. I mean, it was some big money. So it was some pretty. I mean, it was 192,000 shares on both sides of the coin. So for those that know what I'm talking about, that's the $35 strike price on GE. 192,000 shares of volume on both sides. So that's basically almost 400,000 shares of GE was bought. That was GE, not GM. We're fun to talk about. We're about to talk about Walmart. I can't talk about GM right now because we don't have much time. But there was 400,000 shares of volume on the GE $35 strike price, and that tells you basically we're talking about. It looks like someone's looking at a straddle position, which means they're playing both sides of the coin. So I don't know if you guys are in GE. Just something to keep an eye out on. I didn't really do a lot of deep diving into it, but it was both on the $35 call and the $35 put on the November 15th expiration date. All right, so I'm just bringing you the information. What you decide to do with it, I just thought that was the highest volume play of the day. So it was very interesting to see whoever this is, the big boys, come in and get on this GE straddle. And then I looked and I saw that GE they just had earnings come out. So I'm not quite sure what the catalyst or what they're thinking, but they obviously have some interest in GE at $35. All right, so Walmart, man. So what do you guys' thoughts on Walmart? Where did I find this information? It's called a scanner. We have stocks, or I guess you call it a screener. We have stock screens. So as you get into platforms, you can actually set up different screens. So I have my own screen set up to look for things. So yeah, Raz is saying options are good if you want to hedge your position. That's one way to go. I like to do that as well. I did that. I'm long on Apple, and I did a short on Apple and made money on the way down, and still was in my position to collect dividends and waited on it to rise back up. So those are some things that you can do to hedge your positions, to play both sides of the coin. Those are a lot of the times when I'm using options. I'm doing that to hedge my positions. Mr. Anderson said he would buy and hold Walmart to collect dividends.
Yeah, well, that's a good play, but I wouldn't do it right now. And reason being, I'm looking at the chart from a monthly standpoint. Back in June, let's say what that is. Actually, let's do May. Back in May is when I got some notifications of some things that I look at. I got 3-year lows, MACD 3-year lows. I got the crossover on the MACDs. I got 3-year low on the RSI. I got a crossover on the Arun indicator. So, and then on the monthly is about to go up on the it's already below 30.9, which is another indication. So I think it's gonna be in that oversold area for a good while if it stay below 30.9. So I don't know exactly when it's going to bottom out, but I'll say wait till it start trickling back up to actually get in your buy position. But that's just my opinion.
Hey, Walmart is in some trouble, guys. So here's the deal, man. Walmart has been, ever since January, they were trading at almost $90 a share, and they're down to $60 a share now. So if you've been in Walmart, if you've been short, you're feeling good. If you've been long, you're feeling pretty bad. But it's really oversold, but that doesn't necessarily, like he said, that doesn't mean that the bottom is here yet. So here's the deal, guys. Walmart, you got to think about how do they make their money? Walmart makes their money by undercutting everyone else's prices in order to sell more stuff. So that means that they already, for the most part, have low margins in the stuff that they sell because they're buying it for cheaper. They're getting these contracts for cheaper in order for, they make their money off of selling more stuff. They don't make their money off of selling more stuff for a higher price. They make their money on getting more stuff out the window or out the store or whatever the case may be. Well, some people would say, well, hey, when they increase their wages to pay their employees, that cut into their margin even more. And so we saw that Walmart had released their earnings recently, and it wasn't the earnings that was terrible; it was the guidance that was terrible. And guidance is basically saying what we, as the owners of this company, what we believe we're going to be doing in the future as far as our profitability is concerned. And they were saying we don't think it's going to be that great. We're slashing our profitability, our profits down. We're going to take a slash on it. In other words, we thought we were going to. At first, we projected 3 million or 3 billion or 3 trillion, whatever, and now we project 1.5 billion. Well, investors don't like to hear that. That's like, well, hold on a second. Y'all not going to make as much money as y'all were projected to make before. So that's why you see a dip even more on the Walmart side. And then you got to ask yourself, well, when will it turn around? Well, we don't know. But there are some things that we look for as far as indications to know when it may turn around. But we don't have time for that on this episode of Blab TV to talk about. You see what I did right there, guys? Yeah, I set you up. Oh, so Walmart earns on November 17th. Okay, they just warned us before time, so we can. So they already let us know. That's good. I was looking at something else, but so basically, what they're doing is they're setting us up for what they expect, so that when earnings come out, it won't be that bad. So they already taking a hit right now instead of taking a hit when earnings come out. Hey, I see Nathan's trying to come in with us. That's cool. Yeah, November 17th is when Walmart come out. We were going to talk about Google. We don't have time tonight, but Google's earnings come out in 2 days. And Evans, one day you're going to have to get on this hot seat with us, man, because I know you got a lot of information for the people as well. Nathan, I think that I don't know whether you're trying to get in or you're just kind of checking us out. So anyway, guys, you can follow me just by looking at my name up here and clicking follow. You can follow Zoe, look at his name and click follow. And for those that decide at any point in time to get in the hot seat, you can have people following you as well. And of course, if you follow me, I'll follow you back just so we can stay in communication with one another. But I can't, doesn't look like I can follow you from the chat. So you got to follow me in order for me to connect with you. Yeah, I got you, Raz. You just trying to get prepared. So I appreciate you guys coming on. Zoe, you got anything else, man?
Nah, just, glad to be here with you guys again, sharing the information, knowledge, and so forth. Good to pick each other's brains. It's good times when we do things like this. Good positive vibes.
Hey, so you got anything coming out soon? I know you're working on some things. Is there anything you need to report?
Coming up in the work, we have a seminar that'll be November 7th down in Waynesboro, Georgia, which is right outside of Augusta, Georgia. So we'll be doing that. Me and a gentleman will be doing Forex trading, and then some basic beginning knowledge of stocks and so forth, and then just working on individual stock trading classes, and then continuously just sending out stocks and so forth, stock picks and recommendations to subscribers. So you guys can find me at www.anewlevelfinancialgroup.com, and there's a lot of information out there. And then you guys can also hit me up on Zoe right up at the top on Instagram, or you can hit me up on Facebook.
All right, fantastic. So if you guys are looking to, I know some people asked about Forex and some other things. So there's another resource for you guys to be able to connect with and learn. Again, the number one step is to educate yourself. Once you begin to educate yourself and learn this new language, for some it's new, for some it's old, you'll find yourself in a better position to be able to make more intelligent decisions, as it relates to the positions that you make, and hopefully to put yourself in a good position to make money. And that's what it's really all about. So I want to thank you guys for taking the time to get with us tonight. Again, we're going to take a week off because the next week we'll actually be doing some teaching, some deep diving, and looking into some positions and looking into some software that you guys will be using. So we'll be going through the Thinkorswim platform and using that to look at some stocks. So if you're interested in that, and you're saying, hey, I want to learn more, I want to, this is something I'm interested in. Obviously you are, because you're on the call, you're with us here on Blab tonight. Just follow me and you'll see when I'm putting out the meetings and stuff, and then you can just register and just join us then. So that's it for us tonight, man. Thank you so much for tuning in. Follow everybody, become acquainted, and let's continue to have these conversations. And Sean, I'm gonna be, when I come back, I want to see a stock, what is it called, a label or whatever, so I can click on that and let people know we're talking about money here on the on our Blab, on our Tuesday Ticker Talks.
There you go. There you go.
And so for you guys that are new, maybe this is your first time using this system, this Blab system. But basically what it is, man, we're going to have like four seats. And so you'll see these spots where you could actually click a seat and you could actually come on and be live with us, and you can talk and we can have conversations. So if any of you guys want to jump into a seat, you can feel free to do that. It's open to you. Got a couple people that will be logging in a little late and jumping into a seat. So you can feel free to do that. Also, there's a little place probably up here or maybe up there. It says Twitter feed. So that's a place where you can just kind of click the button and you can let people know that you're on, and then maybe some of your followers will want to jump on tonight and just kind of have this open conversation. So that's a great place for you to do that. I see you did that, Carl. I'll do the same as well, I believe. Oh, it says like tell a little bird, so you can do that, and you can post your little tweet. So you see that showed up down at the bottom. Also, if someone jumps into the hot seat, then there's going to be a place where you can, if they jump in, then you can actually follow them on Twitter just by them jumping in. So that's another good way in case you're looking to kind of maybe increase your following. You got something that you like to say, you like to introduce yourself, want people to get to know you. Social media is all about engagement. So if you're one of those people that's trying to build your following and get people to know you, well, this is one of the great places to do it. Just get on and start talking. And if people like what you got to say, then they might start following you. You got make some new friends. So it's another way of networking. And I believe that this platform is a new way of networking because we can do it all from our homes and the comfort. You see, I'm in my sweatshirt. I'm just comfortable right now. I don't got to get all suited and booted just to have a conversation with you. So that's what Blab is. We're going to have a good time tonight. Hopefully you guys had a good time last night. I'm waiting on my good buddy to join me. I don't like to do all of the talking, but hopefully you guys will enjoy tonight. So we got 38 people here, it looks like. 38 people that are watching or something. Let me see what that says. We have 38 total viewers and 10 that are watching live. Okay, fantastic. So we got 10 people that are here tonight. Good evening. How are you? Insagacious. What's your name? Insagacious. So we got Mary, Carl, DeMario. Good evening. Good evening. So I guess where I wanted to start. Hey, Felicia. Fantastic. So where I wanted to start tonight, I was like, man, where will we need to talk to? So if you guys have been following me on Facebook, the first thing I wanted to know is what you guys wanted to talk about. And we didn't get really a lot of engagement for that. I guess maybe people are like, hey, I don't know what stock I like to talk about. So I had to kind of come up with some things. And we'll talk about those things tonight. But I think where we can start is what really is hot right now. Hey, how you doing, Sonia? So in case you haven't been following, I'm pretty sure most of you guys have heard about the Oprah Winfrey stake that she's taken. Anybody know what company that was that she took a 10% ownership in? Oprah Winfrey, probably been the big news since Monday. Weight Watchers, fantastic. So there was a question that came out about Weight Watchers, and it's like, hey, Evan, what do you think? You think you're gonna go and take a position in Weight Watchers? So I'm gonna ask that question to all of you guys, like right now. Oprah Winfrey just took a stake in Weight Watchers. It was trading at $7 a share. Overnight, it jumped to $14 a share. So it did that overnight, the first night that news came out, and then today it jumped up another $4. I believe it's like at 18.93, I believe, right now. So the question is 18.25 right now. So the question is, are you taking this? Are you interested? Are you considering? Would you be taking a stake in Weight Watchers right now? Would you be taking a stake in Weight Watchers right now? So Demario said no. Raz Rising, I think that's Evans Munch, said no. Nathan said no. There are so many free apps. I don't know. Lose it, My Fitness Pal. I don't know. Oh yeah, you can lose it if you want to, right? Carl said not going to chase it. So you're saying she didn't? She can lose weight on her own, huh? Well, I don't think that she necessarily lose it out. We got a whole bunch of new stuff that's out. I don't know about the lose it app. I'm a pretty skinny guy, so it is what it is. But so the question is like, man, a lot of people are like, hey, I want to get in. Maybe you're following Oprah Winfrey and you think, hey, she took this stake, so maybe it's a great investment for me too. And so I see a lot of people are saying no. Is there anybody that's like, hey, I want me some of Weight Watchers right now? And if you're saying no, can you give us a little reason as to why you're saying no? Again, it just jumped up over 100% in one night, went up another 31% today. Now, of course, we're talking about going from $7 a share to $18.25 a share. What are some things that you've seen or that you noticed with Weight Watchers, over the past couple of days, or what makes you go either way, either yes or no, with maybe possibly investing some of your own money with Weight Watchers? And then I'll give my opinion after that, of course. So yeah, Raz Rising said the fundamentals suck. It's way overbought right now. No good news, but she got into the company. Yeah, I got you on that, Nathan. Not sure it would hold up in the long term. Okay, that's some good stuff. So I wouldn't invest in a company whose products I don't use. Okay. All right, that's pretty cool. So you're only interested in investing in things that you use. Okay, that's cool. Need to lose weight, and I'm not thinking about Weight Watchers. Okay. you gonna have to tell me how that Lose It app is. Fantastic. So the question was posed to me, and I'm kind of, my sentiments are pretty much the same. Like, I don't chase money, right? Like, if I was Oprah, I feel pretty good right now because I bought it at probably $6 a share, $6.72. I think she bought it at $6.49 a share right now, and just by her name alone, it's jumped up. I don't know. Just by her name alone, it's caused it to jump up to $18.25. So as far as her stake is concerned, it's sitting at a great place right now. But that's over. Well, that's over 130% in 2 days. It kind of makes me question, well, what's been their problem up until now? How does someone someone buying into the company who just has a 10% stake, has some ownership in the company, but isn't running the company? What makes that company so great now where it wasn't so great last week? Just her name alone, her appeal alone. Now, yeah, it'll bring some more light. Yeah, she needs to, but she can't. When you buy into a company, she'll be able to actually buy more shares at a particular time. So there's a contract set up in that. I'm pretty sure she could just take the money and run. She'd do that right now because she'd make off like a pretty penny. But she has to stay in for a little while. I don't know how long that is. They've gotten killed by the friendly competition. Okay, so they're not. I don't know. I don't really follow Weight Watchers, but I definitely am with someone who said that they don't chase money. I don't chase money. Like, if I was in Weight Watchers already and I'm up 130%, I'd be pulling out. But for me, I'm not going into Weight Watchers right now hoping they're going to jump another 130%. To me, that'd be foolish. It's possible that it can happen, but that's foolish. And matter of fact, they actually got earnings coming out on the 5th of November. So I wonder what's going to happen when the earnings come out, because I don't know how they've been doing. I really haven't been following them. I'm only bringing it up because it's news. And one thing that I tell people is the news doesn't sway me one way or the other. If I wasn't looking at it before, I'm not looking at it now. But I figure you guys want to talk about some of the hot news, so that's why I'm bringing up the subject, because it's something that you're familiar with. If I start talking about some old drilling company, you'd probably be like, I don't know what that is. So This is why, like when you watch TV, when you watch Kramer or anything like that, they're going to always talk about stuff that you're pretty familiar with so they can keep your attention, because the news is there to get you to watch. It's to get ratings. It's to that's what it's there for. It's not to help you make money. And I tell people this all the time. But it is news. It's worthy of talking about. But this news doesn't necessarily get you paid. So if you're watching financial shows or stock shows, just know that. Think about it this way: if they didn't have a pleasing personality, would they be on TV? Probably not. And most of the people that are making money aren't on TV. They're busy making money. So follow who you like. But as far as Weight Watchers are concerned, I'm not telling you to stay away. I'm just saying right now, I believe it's severely overbought. It's been run up just by the news of Oprah Winfrey, and I don't buy news. I don't buy into news because I typically, and if you decide to do that, then you'll find yourself on the back end of what the private investors have already made. You got to think these people have already made their money right now. They went in as soon as they heard the news, or even they probably went in before the news even came out, because they buy news. Think about it. By the time that we get the news, it's already old. By the time it comes on TV, don't you think that these people that distribute the news, that they've already got to jump on something? Okay, yeah. So Raz Ryan said most of the jump was from short cover and had a 56% short interest on it. Wow, fantastic. That's good information. I haven't really looked into it that deep. I just knew that I wasn't going to be investing into it, but I figured that would be a great topic for you guys as well. And another hot topic, we can move on. Man, I sure wish somebody would jump in this hot seat with me. At least have some conversation. I don't want to do all the talking. I know Zoe's coming in a second. He had to oh, here we go. Yes, sir. Come on down. I'm going to give you some props just for jumping in, brother.
What's going on, man? How are you?
I'm doing good. How about yourself, man?
I'm doing well.
What's your name?
My name is Sean.
Sean, man, thanks for jumping in the hot seat with me. I don't like to be feeling like I'm talking to myself. I know everybody's listening.
It's lonely there, isn't it?
So is this your first time on Blab, man? You been here before?
Not really. I actually am one of the founders of Blab. So I helped make this thing. So I was excited. I saw you talking stocks. And I love following the market, so I thought I would tune in.
Oh, fantastic! See, we getting big time. We getting the owners up in this piece. Well, thanks so much for tuning in, man. You could probably help some people understand Blab a little bit better. I'm trying to get more people into this platform. I think it's absolutely phenomenal to be able to have this virtual networking, and so fantastic, guys. So yeah. I see you guys got some questions in. So the next topic, man. Another hot topic, in case you guys don't know, tomorrow there is an IPO coming out. IPO, a very hot IPO. Does anybody know what that IPO is that's going to be trading tomorrow morning?
I do not know. Ferrari?
Ferrari, yes, fantastic.
Really?
So Ferrari is going to be coming out tomorrow. Ferrari is connected to GM in some way, form, GM and Chrysler, I believe. And it's at $52 for the fantastic. Who is this? Salvador? He is on top of it.
So that is reading your mind.
So they priced it at $52. And race is going to be the ticker symbol. So if you're looking for what's going on, now let's talk about IPOs for example. For what you say, 10% of the company. For a little bit. So basically, here's how IPO really works, guys. So right now, the way that it's priced is because of all the private investors that are taking a stake in the company. And so they're basically pricing it based on, how many people are going to be buying into the Ferrari. So the whole goal of the private investor is to boost the price up. So as soon as you start buying it, the retail investors, the me and yous of the world, will make them rich. That's pretty much how it works. But of course, there are some people saying, hey, this is a hot IPO. I think this is going to be great. And I can't think of there have been plenty of IPOs that have come out that you probably thought were great. But we can do a whole lot of research to show you if you get right in, how successful will you be over time? If you think like, what is it? The crazy chicken place that came out, Loco. You kind of see where that is. Alibaba, when it first came out, everyone was all hot on that, and that thing, it didn't tank, but man, it opened up at like $95 and then was trading at $80 a share. So if you got in right at the top, you probably would have been in the losing position waiting on it to rise. So a lot of people are like, hey, Ferrari, I love Ferrari. It's coming out tomorrow. They priced it at the top of its price chain. It was going to be priced between $48 and $52. They're saying it's going to open up at $52. Now, here's what's going to happen. At about 10:30 in the morning, it's going to open up. And we're going to be like, oh, I can get it for $52. But guess what price it's going to probably be at by the time you can buy it? It's probably going to be at like $60 by the time that you can buy it. And it's like, man, do I really want to get it now at $60? If it started at 48, it opened at 52, but then by the time I can really get it, the public can really get it, it's going to probably be at like $60. And you got to ask yourself, man, am I willing to buy this at $60, hoping that it's going to rise to $70, $80 over whatever time frame that you're looking at? So, Sean, we got some people asking you, what are your thoughts about maybe, I guess, the Ferrari, or maybe just about IPOs in general?
Well, actually, I was thinking about the IPOs in general. I was going to ask you, is that even what a lot of people hear is this, the IPO pop, but they, like you said, they didn't even have access to get in because that was before even the general market can buy in. It's already been boosted up, and I was wondering how that works and why is that even legal?
Well,
why can some people buy it on the public stock market before the public?
Well, yeah. So we're talking about people with big money. So when you think about who moves the market, right? Who moves the market are what they call institutional investors. These are people that got big money, they're private investors or whatever. So even though it's going to hit the public, it doesn't hit those public exchanges for the retail investors to get until all of these mass, super high speed trades have taken place. And so they're still bidding and buying into this at like 9 o'clock in the morning, 9:30 in the morning. Then it finally hits the public domain at 10:30. And so someone mentioned that what I look for if I were to get an IPO is, I like what she said. She said the last IPO she got into opened at lower than expectations. If you're looking at something that's got high expectations, then you can expect to pay a high premium for it. If you're looking at something that may have low expectations or maybe not quite as high, then you can probably buy it at a lower multiple and then hope that it rises. So for example, the last IPO, and it wasn't really an IPO, but it was really a spinoff that I bought into, was Synchrony Financial. And in case you don't know what those are, they have all like the store credit cards and things like that. They're kind of like trying to match up with Capital, but they were a spinoff from GE. And so, but they opened at like their price range was between like $14 and $20, $14 to $20, but it opened at $14. I was like, okay, well, I see great value in that. One, it's a credit card company. I know everybody loved that other than me. And then it was a spinoff from GE, so they were actually selling off their financial company. But anytime that I've seen something that had super hype, man, by the time I was able to buy it, it was like, oh, hold on a second, that's too expensive. You told me $80, but why is it $95 now? That's crazy. And so you got to really think about who's really making money in these IPOs at the beginning. Now, I'm not saying that you don't make money over time, but me personally, I like to wait until it settles down, until all of the hype is gone. Because the hype, all that does is make all these institutional investors, all the private guys, the people like Oprah Winfrey, the people like, George Soros or whoever these private investors are, it makes them rich while we're sitting here sweating bullets. And that's exactly what it's intended to do. And that's why they like it, because they generate the buzz in the media. They pay the media to boost up the idea of this being a fantastic company. Matter of fact,
what do you
IPO? Huh?
What do you do for a living?
Oh, I'm a finance coach and a business coach, and I do investing as well.
So are you what type of investor are you? A day trader, or are you managing other people's money? Is it your own?
It's my own. So I'm what you would consider a long-term value investor, but I also do swing trades when I see an opportunity arise. So I've dibbled and dabbed in day trading, but it's not my thing because I just can't be in front of the computer all day because I'm out with clients. And this is what I tell people: if you're looking to figure out what works for you, is figure out what your schedule is. If you don't have the time to be in front of a computer all day, sweating bullets, trying to figure out what you're going to do and getting in and out of positions, and you probably don't want to be a day trader. And I found out in college that I didn't like sitting in front of a computer all day long. So I like to be out in front of the people. So that's why I'm more of a long-term investor. I understand how to day trade, how to look at charts and things like that. But my time doesn't allow for me, nor do I want to, be in front of a computer 10 hours a day trying to make strikes or shoot an arrow and hit something. That's just not my style.
Are you going to start the Berkshire Blabaway for us?
Hey man, you know what? The thing is, this is something that a lot of people that follow me on Facebook and things, they've been looking for a platform to really come and just have open discussion and get different viewpoints from different people. And I think that helps people, and especially those that are getting started, as well as people that are already expanded, to be able to share some of their knowledge. And so this is why we came here. And so wherever it goes from here, man, I'll be more than happy to kick something off and get it going and keep the conversation going. Absolutely.
Another question.
Now, hold on. Let me ask you a question. I didn't see stock or investing on the tabs for me to select as far as the topics. What's up with that, man?
You know what's funny? I'm looking for people to kick it off. The way we do it is we add tags when people start making stuff that would go in the tags. So if you're going to be here, or we get enough of a little finance movement here, then we would have either stocks or finance or economics or something as a tag for you guys to put this content under. So I would love to see it. I mean, I literally, coincidentally, right now I was writing an email to somebody who runs, a site that's for investors and for traders. They get a couple million hits a month, and I was going to say, hey, you should embed Blab on your site so you guys have your own CNBC, right? You have your own talk show all day about what's going on in the market, because there's a lot of people who want to tune into that, and maybe they're looking for a different voice than what they get on TV.
Oh, absolutely, man. That's a fantastic idea. I don't have a few million, but we're working our way up, man. We're just building this little profile. Hey, Cookie, I see you are joining us here in the hot seat. You probably don't even know what's going on. You're like, I'm trying something new. Now she took the light off on us. So in case you guys don't know, there are open seats below. There's like going to be 4 seats. So anybody that wants to jump into a hot seat can do that, and you can have conversation with me and Sean, and kind of go from there. And then also in the top left, there's a little thing that says "Tell a Little Bird." So if you click that, that'll let all of your Twitter followers know that you're on this Blab with us talking about stocks, and then that would allow them to come and follow you as well. Now you see we got the VP up here, Sean. He has a little Twitter account as well, so you might want to hover over him and click on your follow. That'll be great, and he'll probably put some stuff out, but you can go ahead and click up there and follow him. If you want to follow me, you can go above my name, click that as well. And this is just having a good time. So Cookie, you probably like, this is my first time on this thing. I have absolutely no idea what I'm doing.
Cookie, talk to us.
So, you had a question, Sean. I'm sorry.
Somebody in the chat mentioned Robinhood, and I wasn't going to ask you about Robinhood specifically, but what do you think about Wealthfront or Betterment, some of these apps or sort of robo-advisors where you put your money in and you're getting, hopefully, low-fee investments as you go?
So yeah, we got Robinhood, we got Acorns, now Betterment is okay. I'm more cool with that. Most of them I'm not really cool with, because I say it like this. I say, well, here's the thing, guys. If you don't have money to invest, you probably shouldn't be investing. Like, if you only got spare change to put into the market, you probably need to pay your debts off first. Like, you think about it, am I in a position where I know it sounds good to start investing, but there's a lot of different ways you can start investing. Like, you work at a job, you got a 401k, you're investing. You don't save your way to retirement, you invest your way to retirement. So there are a lot of different ways for you to invest. But I would say, if you don't have the discretionary income to actually get into the market, use whatever little income you got to pay off your other debts. Why? Because you're probably paying 10-15% on these other debts that you have, whereas you're probably looking to get 10 to 15% as far as investment is concerned, unless you are just absolutely phenomenal. And more than likely, you might not just be absolutely phenomenal off the top. So it's great that they have these tools out here to help the common man, but then you got to ask yourself, am I really in a position where I need to be starting investing right now? And I would say, if you got to put pennies to the dollar into some vehicle, you might want to use those pennies to pay off your debts, and that'll get you into a position that you're much more, you have much more income or discretionary income to actually put into some of these other vehicles to invest. That's just my take on it. But I like Betterment. I like the concept. I like the idea. And if that's where you got to start, that's where you got to start there. But man, get rid of that high interest debt and get that stuff
debt free. If you're debt free, why would you invest your money yourself versus putting it in Wealthfront versus putting it with a personal advisor?
Well, it depends on your comfortability. So what I preach to people is, first you got to ask yourself, do I want to learn the market? Some people don't. So if you don't want to learn the market, you don't want to know what's going on with the market, then you could put it, you could do a mutual fund, you can do Betterment, Wealthfront, whatever. There's nothing wrong with that, because those people get paid from people that don't have the time to do it themselves. But even if you do that, you still should understand the market, because it's your money. Like, here's the deal. If they lose all your money, they still win. They still get paid. They get paid off of what you have invested.
How can we compete with you, Evan? You know the market. If I'm just getting started, I already have a gap between me and you. So how do I compete with you or the hedge fund managers of the world who have more information, more analysis, more money behind them?
Well, that's where that comes down to you really not trying to pick individual stocks, right? So it's already been proven that about 90% of managers don't beat the market. So a great place to start is just getting a simple ETF and just saying, hey, I'm going to follow the market. So, hey, if the market go down, I go down. If it goes up, I go up. But guess what? If you follow the market and just say the market is averaging 8% per year over the past 15 years, right? That's with the ups and with the downs. Okay, well, if I'm going to get 8%, but then I'm going to pay somebody 2% to manage it for me, then I'm already at 6%. Because I had to pay them out of the funds that I had invested. So why would I, if I could just do that, why don't I just go ahead and put the money into a no load fund, Vanguard or something like that? Don't have to pay all the astronomical fees. Put it there. I'm looking at 7-8%. That's historical. I mean, that's average, and that's great for people that are used to getting 0.05% in their savings account.
So are you saying that I shouldn't have 20% of my money in Tesla right now?
Woo! We talked about Tesla last week, and so if you already had your Tesla, then that's great. But I see Tesla as a high risk, high reward type of a play. So when we look at asset allocation, we look at basically your portfolio. 20% seems a lot for a high risk, high reward type of play. Now, if you told me you had 5 to 8% of your capital in Tesla, hey, that's great. You're taking a risk, but man, you're taking a high risk, hoping to get a high return on something that's trading way above its multiples. And typically, what happens is when we have a downturn in the market, the things that are trading so high above their multiples, they're the ones that take the quickest crash. So you got to know when to get out if you're in a position, or to reduce your risk by reducing your exposure to that particular position.
Sounds good. I don't actually have 20% of my money in Tesla. But I wish I did, because when I bought it, it was at 80. So I should have put more in at that time.
So Salvador, you said that last year your 401k performed at 30%. You said you got lucky. I wouldn't say that you got lucky. I would say that you were probably managing your 401k yourself. And we can actually test that to see if you're actually telling the truth, because we can see what the market did. And if the market did 35%, right? I have to look. I don't remember. I know 2014 it did 35%. I don't know about 2015. I would say, man, if you got 30% on your 401k last year and the market did 22%, I would check your math, because that would be kind of hard to do in a 401k, which you can only do long positions on. So but hey, if that's what you got, that's what you got. I'm not here to get all into your
Evan, are you calling bluffs, man? What's going on?
I'm just saying.
Next thing I know, you'll say, hey, Cookie, you're upside down. Oh, there we go.
Cookie's still trying to get in, man. I don't know what's going on. So, maybe you no, I'm not going to lock her out, but maybe you did get, 20, 35. Oh, he said called you out. You see, they trying to test me right now. They think I'm just a regular guy, but I don't know what's going on with this stuff here. Yeah, Cookie, don't show your cookies. All right, so we got one open seat. That's what Wells Fargo's reporting?
I got to jump out of here, but I'll be listening.
Okay, thanks so much, Sean. Cool. All right, so guys, look at that. We got the Blab VP joining us, man, and thank you for showing us some love, Sean. You know, I know Cookie's trying or she's trying to figure this whole thing out. It's her first time here. So we talked about, what did we talk about? Oh, we talked about Ferrari, and we talked about Weight Watchers. Well, we didn't really finish talking about Ferrari. Basically, Ferrari is coming out tomorrow. IPO. It's priced at $52. I'd be surprised if it opens at $52. It'll probably open a little bit higher than that because it has a lot of hype behind it. So, you know, if you're looking at Ferrari, just be careful. I always tell people, you know, I'm not an IPO guy, but some people are. But I've seen way more IPOs go south instead of north. You can't short IPOs off the top either. So, regardless of how you feel about it, you're either going in, or you're going long, or you're not going in at all. And so, you know, if you're in that position, you want to get some, you're feeling antsy, just make sure you don't put all your money there. You know, be careful with how much risk you take with your percentage of your capital. And I get that. I like them to make quick money, but as someone else had said, I haven't been keeping up with the comments, but you know, a great place to make quick money is in options. You know, I think you have a lot more you have a lot more data, you have a lot more history in order to make educated decisions on the direction or the movement of a particular stock in a particular place win with an option play than you do with an IPO. With an IPO, you hardly have any data. You might get some information from what they release, but they've been a private company, so they don't have to release their information to the public, let you know what their financials look like, let you know how much they sold over the past year or 2 years or 5 years, how much they're growing, things like that. So, you know, to each his own. I'm just kind of throwing out some different options for you if you're saying, hey, I want to make quick money, because when you're in an IPO, pretty much you're basically a swing trader for the most part. There's a back, probably so. So fantastic. So someone okay, we got some, what are you, Salvador? You keep talking about Apple and Go. Are you trying to tell me you want me to talk about Apple and GoDaddy? I think that's what you're trying to say. Oh, there's a bank that owns a lot. I haven't looked at all of the. I'm waiting on my guy to get here. I haven't looked at all of the backings of the Ferrari. I just saw that was a thing. So someone asked, at what age would you suggest young people start looking at living wills, power of attorney, etc.? Is it based on a personal wealth or age? I can't make a suggestion on that. What does living wills and power of attorney? I'm not I don't know, Mike, how to answer. That's not my expertise. So I don't know I'm not going to answer that. I don't have an answer for that. I think you might want to consult with the attorney or something. Yeah, that's not my expertise. I'm not an estate planner or anything like that. I don't know anything about these living wills and power of attorney. So now, if you want to ask me how young do I think people should start to invest, I think you should start investing for your children when they turn 1 year old. That's my personal opinion. You can buy stocks for children, get a custodial account, and help them get started at a young age. The younger you get started, the more time is on their side, and hopefully you put them in a position that they have a lot of money when they get ready to go to college and things like that. This is something that what we're talking about tonight, guys, is something that they're not teaching in school. Oh, good. Yeah, buy stocks for your kids. Why not? If they like Disney, buy them some Disney. Buy them some Nike. Buy them some of these great big companies that going to be around for 30 years or so. They're not going under. So, I don't know about the living will and the attorney part, but as far as investing for your children, I'm under the notion that you start investing for them, whether it's going to be from that from a 529 plan, or if you're going to go into stocks, just depending on what you expect for them to do. 529, they're expected to go to college. With stocks, it's their money to do whatever. And nowadays, everybody's not going to college. So, that's just my personal opinion. So I'm trying to look at these questions here. I'm sorry. So Winthrop said, I'm trying to set my younger brother up with his own portfolio. Where do you think is the best place for me to start him? I guess I can start at. So guys, you can start. Oh, look at this. You can start people's questions and comments. And there you go. There's a 2 on it. Fantastic. That's pretty cool. So when you say, where's the best place for you to start him? If I had a younger brother, and I'm trying to help him with a portfolio, I would start him with one of the more established firms. So I'm gonna look at something that's going to be a little bit more been around for. I wouldn't be looking at like a discount broker, something like a TD Ameritrade or E-Trade or something like that. I'd probably be looking at like a Schwab, a Vanguard, a Fidelity, something that is a little bit more established. And the reason why I say that is because I'm not going to be doing a lot of trading. I'm probably going to be setting up a portfolio, get my young brother started. And that way, when he turns, and when I think of younger, I'm thinking you're talking about under 18. That way, when he turns 18, he can then go and do what he wants to do with that portfolio. He then takes access of that. But because I wouldn't be doing a lot of trading, I would, I would go with something that's a little bit more established as far as a firm is concerned, that I know is established. Again, like a Fidelity or a Vanguard or a Charles Schwab. So hopefully that answers your question, Winthrop. Man, you guys got some questions today. So we got another question. So is there like a question button or something? How am I seeing? Okay, Sean, you got to tell me about this question stuff. This is the first time me seeing this. So I guess there's a little question button somewhere and people ask. Some people are just, Salvador, what are you doing, man? You just throwing out all of these companies. Okay, so Mr. Geek Chris said, hold on a second. What would you recommend for newbies wanting to get into stocks? Okay, so what would I recommend for newbies? One, the step number one, I got steps for you guys, and I'm gonna go over a couple of them. But the number one step, you got to educate yourself. You have to make a decision that you're going to educate yourself. There's no point in you doing anything with your money if you don't know what your money is doing. So you got to educate yourself on the market, start to understand terminology. The stock market or anything else related to money is like a new language. So if you're not willing to learn the language, then feel like just imagine yourself going to Russia right now and you don't know any Russian. That's how you're gonna feel as it relates to your money. You're gonna be like, hey, I don't speak Russian, but I want you to take me to the nearest corner store, and next thing you know, you're at the lake or something because you don't speak Russian. They're just trying to figure out what you want to do with your money. So money is a language. And the problem, guys, is that many of us are not taught this language in school, in public school. This language about how to grow your money, this language about stocks, calls and options and all this stuff. All this it's not really fancy. It's just like being a doctor, right? A doctor talks a different language than you do. Money managers talk a different language than you do. Now we can break that language down to help you comprehend it, but the reality is that we have to learn this language. And once we learn the language and understand it, then we could actually get more involved into us managing our own money. The only reason why we pay people to manage our money is because we don't understand the language, or because it's an inconvenience because we're too busy to manage it ourselves. But I would suggest that you at least want to know, again, what's going on with your money so that way, if you go to the car shop today, right, and they told you that your brakes need to be replaced, you're like, no, I know my car, it ain't the brakes, it's the alternator. Then you're not going to get charged for your brakes getting done. You're going to have them get your alternator to get fixed. But why? Because you know your car. Well, the same thing is with your money. Once you begin to know what your money is doing, where it's going, it's a shame that people go to work and they got these benefits like a 401k and they have absolutely no idea what it does and how they could use it and how it could help grow their money. And most people don't even know that they can change their allocations. Why? Because they haven't been educated. So, Mr. Geek, step number one is to educate yourself. Got to educate yourself. Now I can go into all these other steps, but that's the first step. Once you get educated, then you can start to look at, okay, where do I want to open an account? You can start watching companies. Get a financial app on your phone. We got these smart phones. We should do smart things with them. And one of the things that you can have on your phone is a financial app like Yahoo Finance or NASDAQ or whatever it is, or Reuters. You can have a financial app on your phone. You begin to watch money. And see, we'll watch sports, we'll watch a comedy show, we'll watch YouTube, but how many of us are watching money every day? That's how you get familiar with money. So those two are the steps I'll get you to start with, Mr. Geeks, and kind of go from there. Someone asked, what's range of your fund? Are you asking me how much money am I trading or something? I don't know. That's a pretty personal question. I'm gonna skip that. Next question. Warren Buffett suggests one invest in something you might know about. Is this a wise style of investing, or should one balance their portfolio with things that they know about and stuff they have no idea about? Well, I would say it depends, right? So it's wise for you if you're just getting started. it makes sense for you to look at things that you're interested in, because if you're interested in it, you might want to do further research about it, right? So let's just say, you know, you love going to you love eating out, and you got these restaurants that you like to eat out. Let's just say one is a Chipotle, another one is a Zaxby's, and the other one is I don't know, some no-name brand. So it may be, or Crystals or Wendy's. Let's say Wendy's. So you might like all three of those restaurants. You might like eat there every day. But by you looking into those restaurants or looking at those stocks, it'll help you determine whether you want to further research them to determine whether that's a good place for you to put your money. Just because you like that doesn't mean it's a good place for you to invest in. It could be just a good place that you like to eat. But on the flip side of that as well, just because you don't like it doesn't mean that it's not a great place to invest. So Warren Buffett, and you mentioned him, he also talks about this circle of competence, right? And I think that's what you're talking about. And it's not just necessarily things that you might know about. It's things that I've heard about and that you're willing to know more about, because you may not know about, for a while I wasn't interested in oil companies. I didn't know anything about them, but then I started to research and I started to understand that, man, okay, they make gas, they got all these, it's not going anywhere. We use it every day. So I started wanting to get to know about oil companies. That may not be your thing, but I'm just saying, where you're getting started, you're going to start with what you know. That's your circle of competence. So let's talk about the circle of competence. What is it that you know? One, you know where you work. So wherever you work, whatever industry you're in, that's a circle of competence. That's your industry. If you're in a food and beverage, you should know that industry. If you're in the steel, you work at a steel company, that's your industry. Oh, I got you, Sean. What else do you know? You know where you like to shop. That's a great place. You know where you like to shop. You know what's hot. You know where people are spending their money. You know where it's profitable. You can kind of tell what's profitable and what's not. So that's a good place for you to look. Where you shop, where you work, and what you're interested in. So that's a great place for you to go. But you definitely want to have balance in your portfolio, especially if you're just getting started, because you don't really have an indication. You don't know how to really look and indicate whether something has a high probability of going in the direction that you want it to go. Some people don't even know that you can make money on the way down. So I'm just talking in general right now. But a lot more money is made when the stock market crashes. A lot more millionaires are made when the stock market crashes than they are on their way going up. Why? Because it's easier to fall than it is to climb. And so if it's easier to fall than it is to climb, and I actually play right and it falls, I make money much more rapidly when it falls. And so, that question kind of goes into what type of investor you are, what you're interested in. But I would definitely say you want to start with what you understand. And then as you grow and as your understanding grows, then you can start to expand your portfolio. All right. Somebody said makes sense. Hopefully that makes sense. I'm just, All right. I might have to get some water here in a second. All right. So yes, you want to get a player account. Yes. Stay away from penny stocks. I would agree. You want to stay away. If you're just getting started, please stay away from penny stocks until you get a better understanding. You're ready to take. You're ready to take on some more risk. Because here's the deal, guys. You don't really understand money that right. So most people will say, hey, the penny stock it's cheap. And they feel like, hey, it's inexpensive. I can afford it. I can afford to lose or win this money. I would say, why start with something so risky? Why not take something that is start somewhere where it's more stable? The Dow Jones Industrial Average, right? The top 30 companies, the top in this industry, top companies, their industries. These are companies that are going to be around forever, or have a good idea that they'll be around forever. It's going to take a whole lot for Nike to go out of business. It doesn't take nothing but a whisper in the wind for, whatever the Starberries to go out of business. You know what I'm saying? Yeah, they think it's on sale, but it's really not. They don't have a track record. They're not regulated. I'm not saying you can't make money in penny stocks. What I'm saying is I believe you should start by building a portfolio. And then from your portfolio, whatever your level of risk is, that's the percentage of your capital that you can take and put into a place like a penny stock or a high risk investment or something like that. But for many of us, we're going to be starting out in this position where we don't really have a lot of capital to lose. And so why would you risk all of your capital on something that's a high risk investment that gives you a greater probability of losing your money? Then what? You're going to say, oh, the stock market isn't for me. You're going to be out of the game for 3 years. You're going to be, cussing everybody out because you lost money doing something that was stupid and silly. And I'm not calling you stupid or silly. I'm just saying, to me, that's just pretty dumb for me to take all of the risk and put it somewhere that I'm not really able to. I'm not in a position financially or in a position educational wise as it relates to money and the stock market to be trying to make those type of plays. So he said that's the geeky way. So Mike, you got a lot of questions here, man. You might want to hit this hot seat. Who gonna hit this hot seat with me, man? Okay. I've been searching silver as a precious metal commodity. I look at how many uses it from the currency weaving into clothing. Is gold, silver, rare coin still a viable route to look at for a long-term hold? Absolutely. Absolutely, Mike. I believe that it's a great place for a long-term hold. Now you can, some people want to buy the commodity and hold it as itself, like they want to hold gold or hold, like the physical gold. Now I don't subscribe to that. I think that it's much better for me to buy a company that has something to do with gold or silver, or ETF that has something to do with gold and silver. But I truly do believe that gold and silver is on sale right now. And as we look at going into this position of turmoil in our economy, and what do I mean by that? Well, we're about to get a new president, and that's going to be a leader of our economy. We have no idea what this new president, what their policies are going to be. But we do know that gold and silver is still valuable. Matter of fact, if you've been watching the gold and silver recently, you've seen gold take a huge spike up. Matter of fact, I'm in this, in my gold positions, they really have been holding strong. And that's a place where a lot of people go in those times of volatility. When they're unsure, they say, well, hey, at the very least, I can invest in gold. And I believe that gold and silver are still on sale right now. God, you guys got a lot. How many do we have on this? I got a lot. Okay. All right. So someone asked, do you think a possibility of why people try to risk it in penny stocks that they don't truly understand the risk? I personally know very little about stock. Yeah. You hear all these great stories about these few people that have made a lot of money in penny stocks, and penny stocks are cheap. So if you go into the market, you're like, hey, we just talked about acorns and better investing. I don't have a lot of money to invest, and I want to diversify, and I want to try all these different places, and I can get a stock for 2 cents. Why not start there? But so the thought process is that, hey, Nike is trading at $125 a share. I can only get one share, and that's going to be it. But I could go and get this penny stock and get all these different companies and shares, and they feel like they're diversifying. I think that's the thought. Well, it's cheap. And that's how a lot of people think. They're not thinking about making money. They're thinking about how much can they get and hoping that they're making money. But I would sit in that Nike stock. If that's where I started with one share, hey, I'm good with that. I got a share of Nike, one of the top companies in the world. I know that every time that a pair of Air Jordans come out, all my people are going to be standing out line buying those Air Jordans. I can look at their profitability and see that every year they're increasing in their earnings every year. There's a reason why Nike stock continues to rise. There's a reason why they continue to split. There's a reason why they pay a dividend. There's a reason why they're one of the top companies in the world. For me and my money, I tell people like this: if it's your last $300, this is the only $300 you got, would you rather put that into some penny stock that you don't know anything about, or would you rather put that in some stock that has been around for a while that you can, who are you going to go down with? I'm going down with the people with the gold medals. If I'm going down my last $300, if Nike take me out, I can live with that. I can't live with going with some no-name company that I don't know anything about. They sound good. Somebody told me about it. My good uncles told me it's a good stock tip and all this stuff. I'm not going out like that. I'm going out with the top dogs. If they go under, the whole economy has to go under. And I'm just willing to bet my money there if that was my last $300. Man, yes, we got plenty of seats here, guys. Salvador, you're right, man. You got a lot to say, man. You might want to jump. Who's going to jump in this hot seat, man? So how do you purchase gold? Yes, I see a question. So are you talking about the physical gold? They have programs out for you to be able to buy physical, gold and silver. They got a lot of different ways for you to do that. Like I said, I'm in the stock market, so I look at how I can actually connect with companies that own gold and silver. Does it cost money to purchase stocks? Iron Greco, are you serious? Uh, okay, I'm gonna take that. That's a serious question. So yes, it does cost money to purchase stocks. You have to pay a stock broker, and that broker is the middleman between you and your stock. So yes, they get paid, and you pay them. So when you buy a stock, you're going to pay a commission. Some places it's $5, some places it's $8, some places it's $10. Whatever it is, you're going to pay a commission, and you're going to pay a commission to buy, and you're going to pay a commission to sell. So if it's a $10 commission, you're going to pay to go in, and you're going to pay to go out. So to get in and out of that position, it'll be $20. Now you got to think, you got to understand that, because there's some people that are trading all the time. And so even though they're making great profits, quote unquote, or they're making some good gains, they're paying a whole bunch in commissions, which cuts down their gains. That's another reason why I'm not a big into day trading. I enjoy it. I like the rush, but I started calculating the cost of these different positions that I was in. And I was like, I can't do this all the time, because all of my profits are going to pay commissions, and you're not going to win every bet that you make. You got to understand there's going to be some things that just don't go the way that you thought that they would go. You're going to take a loss, and you're going to take that loss along with the commission that you paid to get in and out of that position. So me personally, again, I'm a long-term trader. I do some swing trading on the side. Whenever I see a position, I'm like, hey, I feel pretty good about this. I get in and I do that. Where did I go? Huh? Am I still here? I don't know. You can't see me? Am I the only one that you're the only one that can't see me? I hope not. Okay, Sean still sees me. I'm still good. Thanks, Sean. All right, fantastic. Whew. Okay, you guys are really hitting me with a lot of questions here. Here we go. Oh yeah, we got a connector. Fantastic. Somebody gonna talk to me tonight, because I was getting a little. Yeah, Market Watch is a great place to go. There's a great. Yeah, so Robinhood free commissions. That's great as well. Thank you so much for trying to come in here, Miss Sonia. All right, so let me go back up here. I see we had a lot of questions. Yeah, I know that's right, Sean. I'm gonna have to give me a Blab shirt, man. So, said I'm interested in investing in oil and gas companies too. Where do I? Okay, so I think this Mr. Anderson. You got a lot of questions, man, and I'm gonna try to answer as many of them as I can. Oh, that was an accident. But I think that I think it's going to be in a position. You're going to be in a position where you need to get a little bit of education. Now, and I know we talked about that as you move forward. But as you get on things like this, and as you educate yourself, a lot of these questions that you're asking will be kind of answered for yourself, because it seems like you're trying to figure out where you want to go first. I mean, you can ask a million of the questions, and that's fine. But you asked about gold, you asked about oil. It sounds like you really are just trying to kind of get familiar with the market, which is what we're here for. Don't listen to people when they tell you to buy a stock. That's true. Viv is a good site too. Yeah, you got to investigate a company. So as far as oil is concerned, there are tons of oil companies. There are companies that process oil. There are companies that drill oil. There are companies that store oil. So Investment Club is a great place to start. We actually have, well, I'm not going to talk about that, but anyway, so there's a ton of different ways for you to invest in oil. If you think about the gas stations that you go to, those are oil companies. BP, Shell, those are oil companies. So, it really comes down to looking into the particular companies, or kind of putting those on your watch list and watching them, and kind of seeing where they are. Now, oil itself has been on the decline. I think that they're getting to a place where they may start to settle. And once they begin to settle, that might be a good place for you to actually take a position in oil, because it'll show that their decline is done. And you might get it at the settling price, which will, I believe in. I'm a big believer in oil. I just don't see that we would ever stop using oil. I know that at some point the demand the supply is going to catch up with the demand, and we'll be back in that same position where we used to go to the gas station. They'd be like, "Oh, well, we're out of gas," because everyone was buying up oil. So I believe that's going to happen again at some point. So I'm just waiting on oil to settle so that I can increase my positions in oil. Zoe, man, hey. I've been at it by myself for a while. Thanks for joining, brother. Nobody wants to get into the hot seat, man. We just had Sean, who is the VP for Blab, join us, man, and he said he's going to he's going to make sure he gets us a stock simple so that when we set up these calls, we can actually click on stock and have a tag for it. So I'm holding you to that, Sean. I know you're going to make it happen. He's a VP of Blab, so he jumped on with us. You missed it. He started asking a lot of questions as well. We might be the leaders of the new school on Blab.
Let's do it.
So Zoe, man, thanks for joining. We talked a little bit about Ferrari and the IPO that's coming out tomorrow. We talked a little bit about Weight Watchers. Obviously, that's the big hot topic with Oprah taking a position in Weight Watchers. We got a lot of questions that's been coming in. A lot of things that's been coming in. I can't answer everything. I'm trying to get to as much as I can. So for those that don't know, this is Zoe. He's got his own company as well that deals with helping people to establish portfolios and get stock tips and things like that. Above him, you may want to make sure you follow this guy. He'll help you out as long as myself to try to get you as many answers as we can. You guys got a lot of questions, and just kind of follow this guy and keep up with him. Because as long with myself and him, we'll probably be able to help you, especially if you're just getting started, you need some help, you just want to have conversations, man. That's what it's all about. The more that we talk about money, the more we'll begin to understand money, and the better we'll be able to make decisions as it relates to our money. Would you guys agree with that? All right. Okay, so Zoe, here's one. What's the Fed rate hike impact on stocks? Man, so that's a great question, guys. That is a great question, and here's my. So I'm gonna let you go first. I'm already parched.
Yeah, one thing I noticed dealing with the Fed rate and stocks is the banks usually take a big hit with the interest rate going up. Some of the banks and mortgage companies they take a big hit because people usually try to shy away from borrowing just to see how much the rates and so forth are going to go up and impact their homes as well as they're trying to borrow, because as much as you borrow, the amount of money you may have to pay back. So banks usually take a big hit.
So yeah, Raz said that it impacts stocks differently. It does. It impacts a lot of different stocks. But if we talk about the stock market as a whole, I would ask you this. I would say, well, let me ask you this. What has the impact been on the stock market with rates being at almost 0%? And so if you've been following the stock market and you know what's been going on since the crash, rates have been pretty much at 0%. And guess what? The stock market has gone up. It's doubled, almost tripled, 6 years strong, right? So if rates were at zero and the stock market has just been on a tear as far as a bull market is concerned, then what would you think is going to happen if the rates rise for the overall stock market? Now, I'm not saying it won't continue to go up, but I can almost bet that it won't have such a meteoric rise that it's had over the past 6 years. Yeah, there'll be some slow growth, right? I mean, it's just, to me, it's like common sense, guys. Like, okay, and I'm not saying that everyone doesn't have common sense, but when I look at the market sometimes, I say, well, hold on, what has happened? And what has been a catalyst for what has happened? And if that catalyst changes, will that change what has happened? And I believe that it will.
Yeah, so can somebody please tell that lady to go ahead and make that decision? Because all it's doing is just making us going up with our decision and making us going down with our decision and worrying. So
Oh,
if they just go and pull the plug, then we can go ahead and be satisfied.
yeah, you talking about Miss Yellen.
Yeah, Miss Yellen. She got everybody yelling.
So Carl, you're saying put money in other nations? Well, I don't know about that. A lot of those other nations depend on how really depend on what happens with the United States. That could be a play for you. There's a lot of different ways that you can play it, right? So are you saying that you want to put money in other nations because you think other nations are going to take off and appreciate? Because we've seen other nations appreciate with the United States. We've seen China blow up. We've seen other nations blow up with United States. But we also saw other nations during the crash. We saw those other nations take a dive when the United States took a dive. So now you mentioned Brazil. Brazil is taking a hit recently. It's not been fun being invested in Brazil over the past 6 to 8 months. So now, can that turn around? Absolutely. But they've been talking about Brazil as being part of the BRICS. In case you guys don't know what that is, that's Brazil, Russia, India, and China. And what's the S? Soviet Union? I don't know. Anyway, it's an S on there too. I can't think of the name of it right now. South Africa. Yeah, I'm sorry. Of those countries being the emerging markets. Well, yeah. China has kind of emerged, but Brazil, it started to move, but then it took a tick down. So, all of this comes down to, are you looking at like investing in the nation itself, like an ETF, or are you looking at individual companies within that nation that might be blowing up? So that comes down to a top-down analysis on not only the country or the local market or not only just the global market, but the local market, the industry, the sector, and the company itself. So to answer that question, it takes more of a deep dive of analysis as to see what's really hot right now or what's going to be hot. And if we find out what's hot, then we can look and say, okay, well, not only what's hot, but where is it hot at? Is it hot in the United States? Is it hot in China? Is it hot? You know what I mean? So those are some things that you kind of got to look at. You said 20 down the road, it might become something. How long are you looking to hold your position? Those are some other good questions to ask. So I'm not necessarily a big believer. I'm a big believer in the global economy, but as you look at your rates rising and where to put your money, I think the market's trying to tell you where to put your money. And if you don't have a position in gold or silver right now, I would ask you why not? At least some type of position in gold or silver, because we're starting to see that every time that they even talk about raising rates, we see those positions kind of move up or take a bump. And then when they don't move up, we see them settle down. So that gives us a good indication of where the institutional investors are going to put their money as defense. Because here's the thing about institutional investors, guys. They don't want to take money out of the market. Like, if the market was a crash right now, they're going to be telling everybody to hold. They're going to be telling nobody to sell. Or they're going to tell them, we're going to buy and hold. We're going to put your money in over here. We're going to put your money over there. They're never going to tell anybody to go to a cash position. So if their money is not coming out of the market, that means that they're putting their money somewhere where it can be either protected as far as being conservative or where it can still grow, because that's how they keep their clients, by showing them that, hey, the market took a 5% dip, but we only took 2%, so we're good. so where you got to start thinking, where are the institutional investors, the people with the big money, where are they going to be putting their money? And that's where I would be going with my money. Oh, fantastic! Congratulations.
Correct.
Oh, that's Paris. He just got his TD Ameritrade. He just got his account open. So fantastic, brother or sister or friend. You got your brokerage account open. That's congratulations, man. Anybody else just recently got started in the market or looking to get started in the market? All right, yeah, Mr. Anderson, I'll be working with you. I know we're following each other on Facebook. So in case you guys don't know, I also, I got to throw plugs in. I do have some classes for people that are looking to get started in the market. We got a stock market 101, which is a beginner's guide to the stock market, 7 steps to owning your first stock, and 3 keys to asset analysis. I actually did a class with gentleman, Mr. Zoe here. We did a class on technical analysis, how to spot breakout opportunities in the market. So that's another class that's actually stock market